Good morning, Tony Sycamore here. It is 14th of March 2021, bringing to you a video analysis of 5 key charts of interest for the week ahead. Let's dive straight in and start with the S&P 500 on the daily charts. Now, we spoke about the fact last week and in previous videos that we've seen a real two-step forward, one-step process of price action over about the past 4 or 5 months. And last week we saw the rebound from the bottom of trend channel support really gain traction, and it now appears the S&P 500 is intent on having a look at this trend channel resistance coming in around 39.60, which lines up very well with this false break higher around 39.59 and a quarter from mid-February. My base case is that we're going to see more of this choppy upwards sloping price action. So for me, I wouldn't be surprised to see a little bit of rejection from this trend channel resistance back potentially down towards 3,900, maybe a little bit lower before another push higher up towards 4,000 into year end. So I think the boundaries are set out fairly clearly for me in terms of what I want to do in the S&P 500. I really like buying dips down towards this support area here, which is coming in around 37.70-ish. Don't want to see it below this 37.20 low, and I am looking for a push higher towards 4,000 over the next 3 or 4 weeks. Looking at the local market, the ASX 200, a beautiful trend channel in place here as well. And last week it held an area of support which is quite well defined, this 66.50 area. There is now 3 clear lows there, and on the top side there has been 3 pretty good rejections of resistance above 6,800. So I think for the week ahead, presuming the ASX 200 can really get a toehold above this 6,800 area, I would like to think that the ASX 200 can push up towards 7,000. So in a nutshell, I'm looking to be a buyer here, probably put on a little bit of a long position if you haven't already. And I'd be adding if the ASX 200 can get a nice toehold above 6,800 at daily close, let's say above 68.20, 68.30-ish, to give us the green light that potentially this move towards 7,000 is unfolding. Turning to currencies, the Aussie dollar. I really like the way that the Aussie dollar has undertaken this corrective sequence. Now it is 3 waves, and what you'll notice here is there is a 5-wave advance, which in Elliott wave gives us a pretty good idea that the trend is higher, and when it's followed by a 3-wave pullback, then you should be looking for a retest of this high here. For last week, it popped above 77.20-ish, which was short-term resistance. And you can see now it has become short-term support. So let's say 77.20 to 77 the figure, providing the Aussie can hold above this support zone here. And I think it can initially push up towards this 78.20 to 78.40 area, which isn't a huge call. It's almost there. But if that level was to break, I think that gives the Aussie the green light to push up towards 80 cents. Dollar yen. Well, dollar yen has been on a very strong uptrend, but ran into resistance recently. 5 years of data, if you go back towards this 2015 high here, 125.85, dollar yen is now testing that multi-month trend line resistance coming in around 109.25-ish. Really a lot riding on whether this level holds on the downside or it breaks above this resistance zone on a sustained basis. So my initial inclination is that this area should continue to cap. I am looking for a minor retracement back towards 107.50-ish. But if for any reason dollar yen breaks, and I'm talking about a sustained break, not just a false break higher and it closes back below here. If we got 2 consecutive closes above this area, then you can look for dollar yen to push up towards the next upside area, which is 110, 111.72-ish. But we do need to be mindful that it isn't broken, that this is major resistance, and that a little bit more back and fill would not surprise before that up move eventuated. Turning now to gold, and what I really like about gold on Friday was this buying tail here in gold. It's replicated in silver as well. And this is despite the fact that US yields closed up near their highs. And previously, we've seen gold and silver trade lower as US yields rally, but finally a little bit of decoupling here. And I think what the market's starting to look towards now is, well, okay, yields are going up because people are talking about inflation. If we are starting to see some inflation, it's because the economic recovery is doing really well. And in terms of when things start to get a little bit heated on the inflation front, probably around May, that should be a good thing for gold. Gold generally performs very well in inflationary times. This whole price action from the 2075 high, I see as being corrective within this trend channel. We're down towards where I think there should have been a base. In fact, I was looking for a base a little bit higher last week. I didn't really think we're going to break much below this 1680 area. It broke by about $3 or $4, and this looks very much like a false break lower to me. Beautiful pincer movement here with the candles. You've got the red bearish candle followed by a green bullish candle straight after. Another example of buying coming through here. And I think that adds to the case that gold has found a base. In terms of the top side levels, where they're pretty clearly matched out, you can see this 1760 to 1765 area would be our first upside target. And if gold was to break above 1765-ish, I think it opens the way for it to look towards this 1850 to 1875 resistance zone before this trend channel resistance coming in around 1900. So in a nutshell, our bias is to be a buyer of gold. We are looking for prices to push higher. This is support here. This is a clear cut where we're wrong now. We don't want to see it breaking below 1676. So everything in line for us there in terms of a potential long trade there in gold. Folks, that is all for this week. I hope you found this video useful. If you do like our videos, please subscribe to our YouTube channel. Thank you for listening.